Hello Market Club members everywhere. Adam Hewison here coming to you from the digital studios of Market Club. Well, lots going on. Obviously, the Fed's meeting today. They're going to have to decide whether or not they're going to raise interest rates in December. That's still like a 52 proposition, 52% possibility. I don't think that's a big deal right now. I think what we want to look at are individual stocks and what's going on in the market itself. That's really telling you the whole story. First stock we're looking at is Taiwan Semiconductor, TSM. That gave a buy signal yesterday and a monthly buy signal at 22.78. It's currently at 23.27, and it looks to us as though we can see this market go to new highs. A couple of things we noticed in the stock that we like. One is you had the classic Fibonacci retracement, which I think is significant. We had the move up, as you can see, from here up to here, came back down. This is 61.8% pullback, and we've just broken over a head and shoulders base. Let me show you how that is looking closer up. So let me clear the screen. Let's go to like a 6 month or 3 months, 6 months. So this is what we're looking at right now, and that is the sort of base it's being built in this market. So you can see a little sort of like that, and this is where the neckline comes in right there. I'm drawing it freehand. So you had the breakout really yesterday, the monthly trade triangle at 22.78, currently a little bit higher. I would wait for this market to maybe regroup over the 23 level and then look to be a buyer. We see this market going from the 18 level up to, let's say, we'll call it the 23, that's $5. And if we add $5, so $23 plus 5 gives us 28, and that's a target zone for this stock symbol TSM. It's for the Taiwan Semiconductor. You may want to check that out. I wanted to show you this. Walt Disney reports tomorrow, and we have a very mixed picture on this. You can see our monthly trade triangle is negative, and our weekly is positive, meaning you should be on the sidelines, and that's exactly where we want to be on this stock. You can see the action today is not very, very good, and I think you want to be a little bit careful. The market's telling you that it's not going to be such a great report so far for Walt Disney, but we'll see it after the close tomorrow. This is the Dow. You can see we have a monthly now. All of our trade triangles are positive, so the trend is on the upside. However, we are banging up against this resistance. We've talked about this before. You can see it right here. And I think that's going to be a real problem for the Dow to get over. The fourth quarter is usually a good quarter for stocks. Whether or not is this time, we'll have to see. But generally speaking, you want to be long right now. If I have a bullish bias, I should say, to the stocks in the Dow. So let's see how that works out. Pretty much the same thing with the S&P 500. You're banging up against this highs right here, and I don't know if we're going to get through it, but if we do, obviously it's going to be a very, very good picture for this market, but we're incredibly overbought in terms of this is the Williams percent R, indicating we spend a lot of time up here. It doesn't usually spend this much time up here, so we'll watch that very carefully. I would not be surprised to see a pullback from current levels. On the NASDAQ, not so much there, but you see this last level of resistance around the 5,200 level. I think we have to overcome that, but again, we're right up there on the high level. Cyclically, we could see this market come back down again. So I'm not so enthusiastic, but it's a little bit mixed picture here. We don't have a full component of green trade triangles. We only have a monthly red and a weekly green, which is a convergence of sidelines positions on that particular index. Crude oil, much the same picture. The trend is down still, but the daily is up, indicating you should be on the sidelines in this market. You can see how that's worked out. Sort of just chopping around here, but generally speaking, it's in a broad trading range, bounded by 42 on the downside and 50 on the upside. This is the Eurodollar. I'm going to get a little closer here. We're going to just do like a 6-month chart. You'll see this is not looking good. It's actually, we're looking for the 108 level. You may remember we've been talking about that for some time. So let's just look at a close only chart on this, and you can see if we just do a close only, you can measure from this low right here, let's put that in, the 110 level up to maybe the 114 level. So it's 4 from there, from 111 it gives you, so 107 to 108, I think that's the target zone for this market. Certainly I think we're going to test these levels right back here. So let's see how that plays out. It is under pressure, is below the 50 line on the RSI, indicating further weakness. This is gold. This has not been performing very, very well. We have a mixed picture here. In fact, we have the monthly positive and the weekly and the daily negative. Now, with both of these negative, you should actually be short this particular market right now. But let's see how that plays out. I'm not convinced either way. It seems like it's been very, very choppy. You can see this action here. So I think the best way to look at this is look for better opportunities in some other markets, and I think there are plenty of them. TSM's one, the Taiwan Semiconductor, and also the one we gave you yesterday. So I'm Adam Hewison for Market Club. Thanks for stopping by, and every success. Thanks for watching.